Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another technical analysis, candlestick chart analysis, online trading video. I show you in this videos how and why I took some trades, what you should care about, and why I entered into a trade, and what are the small and big tricks to get the trade in the money. Because we have weekend, I do not have the OTC market available, so I cannot show you any kind of live trades. So I'm doing those kind of technical analysis and candlestick chart online trading videos to educate you more in using technical indicators, and also using better to understand what the EMAs and the Bollinger Bands are telling you, but aside from the price action, because mainly the price action should be the reason to enter into a trade. So yes, all those things which I'm explaining are like always based on those things which I have explained in my ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option tool trading concepts, market condition, trend identification, rejection, candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free. You'll find the link in the description, and in the description you'll find also the link to the Facebook group. So let's start. Yes, we have here this kind of video here. I will do play here so we can. Okay, first of all the market condition. You see here we have here a steady uptrend. Yes, here it's a steady uptrend. You see the Bollinger Bands are telling this the same. Yes, you see we have here a trend channel. This trend channel is running here from here to here, yes, and from here to here. And here we got also a breakout of this trend channel, a pullback from the 20 EMA. That is a sign that the uptrend is nice. Yes, it's a nice uptrend. If you get pullbacks from the 20 EMA or from the middle Bollinger Band, you know, okay, that is nice. But it should be an uptrend in this form that there will be also a movement upwards away from the middle Bollinger Band or the 20 EMA. It's not enough only to get one candle, because after this you can got here some kind of double top, and then price will go down. Yes, you have to understand that here you see here a pullback from the middle Bollinger Band or from the 20 EMA, and then you get the second pullback here from the one deviation Bollinger Band. Here you see the squeeze, yes, the Bollinger squeeze, and after this you get a breakout, yes, and that is also nice, yes. This one here would be a nice call. As in this kind of condition, yes, because that would be clear that this would be an uptrend coming, and that you get a nice victory candle. So okay, then after this you see here that was this kind of trade. I have done the explanation before. I entered here at this level into this trade. Why? Because we got here this kind of not so strong uptrend. Yes, then we got here this kind of shooting star in combination with the engulfing candle. Yes, and on the rejection from this level here, I entered into a put, doing a put here. Yes, because of the reversal. Yes, if you get such kind of huge candles here, and then you get a shooting star, yes, and then you get this kind of engulfing candle in confluence with this shooting star, you can enter without any problem into the rejection from this level here, which is also here another confirmation by this wick, and then you get here this kind of trade, which is almost a sure shot in this case. Yes, so okay, that was in the money. Yes, and so let's see what's happening. So that was the market condition. You see we have an uptrend. Here we see already that that we are getting here that we are getting here the buying pressure reduced, the selling pressure increase. Yes, so let's see what's happening here. So I entered immediately into a put, yes, because of this reversal. You have also to understand, let me show you this, which I will show you. If you see such kind of behavior here, yes, this kind of behavior here from this level, yes, you should watch for the ratio. Yes, if you that you will learn when you apply often. If you apply often the Fibonacci levels, yes, you will understand. Yes, maybe here this level. That if this is 100%, yes, you have here the 161.8 Fibonacci level, yes, and that is a ratio which you will understand often, yes. You will understand this if you start to apply the Fibonacci tool. You have to apply the Fibonacci tool whenever you can to get those kind of ratios blindly, yes. So, and you see we have here, yes, we have here this kind of yes, this resistance level, yes, because this wick is showing this, and this candle got also a rejection. You see here a small wick which goes up, yes, but because we got here a reversal from this level, and this area was far away, I want to enter at this level, but the candle was so fast that I entered below this level, but no problem. The thing was this, that I understood that there will be reversal, and as long as this candle doesn't touch this level, and you can do a put in this kind of condition because you have this kind of space. Obviously, it was a little bit bad because at the end the price was too fast going down. Yes, that is what happens often. Or you enter is 1 second before the new candle starts. Yes, then you get a good entry point, or you get a late entry point. Yes, that can always happen. So okay, let me put this video now back. So I entered into this trade. Okay, let me show you this. So okay, I entered into this trade. I forgot to stop the video. So, and you see we got a rejection from this level here, from this wick. Yes, that was already the first sign that it should be, and that was the reason why I entered and took the Fibonacci level. And you see, by drawing the Fibonacci level extension, yes, by drawing the Fibonacci, I saw here that this would be not good. Yes, I saw here by doing the drawing that it doesn't fit the level. Yes, I had to get it there, and then it fitted. So let me see. You see, let me show you that I can explain this more in detail. So we have here, when I have put the Fibonacci level here, you have seen that the level was wrong. Yes, the level was wrong. It was somewhere here. Yes, and that is what I mean. If you draw your Fibonacci level, you have to see if you can get any kind of confirmation, yes, of that what you are drawing. Yes, and why is this fitting? Because you see here was a reversal happening exactly on this level. Before it was somewhere here, yes, where no reversal was happening, yes. So it was not right, and that was the reason why I changed, yes, the position from here to this level here, after to see if this will fit here, yes. And you see, that is what I have explained. If you get this level here, you get here the 61.8 Fibonacci level, yes, and that is a ratio which you can train your eyes for. Without applying the Fibonacci level, you can see this kind of levels. Obviously, the eye is never so correct like the drawing tool, but it doesn't need to be a drawing tool so correct like a drawing tool. It's only important that you get this kind of candlestick as reversal candlestick pattern or weak candles, which are showing you that there will something happening. So after I have drawn this, you see here we got here the 100%, which is working really nice because this candle got a rejection from it. This put was still in the money because there was space. Yes, also if the entry point was late, I want to enter here. So, and this wick here is showing now that buyers are getting in, yes, and that exactly on this level here where there was the change of confluence, which I'm explaining in my last live trading videos about the change of polarity. Yes, the support changed to resistance, resistance becomes support. Yes, and in this case, resistance becomes support. Yes, that is the concept. We are in an uptrend. Yes, you see the 100, the 50, the 20. Yes, and then price got here a rejection from this support level. So okay, Let me continue, and if there is something what I have to explain, I entered immediately into a call, yes, without any kind of rejection or anything, yes, because I understood the change of polarity, yes, yes, and you see price is reversing. Important here is that the downtrend was not so strong. Yes, this minor downtrend here was not so strong, and we had a nice uptrend. Yes, that was important because this kind of rejection here from this level showed me that price will reverse. Yes, or retrace at least. Yes, I'm not expecting a reversal. I was expecting a retracement. Yes, but anyway. For one candle, that is what I was expecting. So let's see what's happened here. Yes, price reversed. Yes, because at the end the 100 level, yes, is not such kind of level which I would say it's a really good point to do this. So now we got a weak candle. So we got a weak candle after the touch of this level. This looks also like a little bit like a harami. As you see here, the body inside this kind of candle, yes, it's like a harami, a bullish harami. Yes, and that is also a reason why I have done a call here. After the reversal retracement, yes, I could have done also a put here as continuation of this downtrend. Yes, but here we have a lot of things together. Yes, we have first of all the harami. Then we got here these two wicks which are getting a rejection both from this level. Yes, then we have an uptrend. Yes, and that is the reason why I did a call instead of a put and not a continuation, because I understood from this bullish harami in confluence with this tweezers bottom. Yes, and this uptrend, that price will reverse and continuing his uptrend. Yes, that is what you have to understand. The thing is this, that you cannot trust 100% this 100 level, because this 100 level is done by yourself. You can put the 100 level where you want. Yes, you can trust the 161.8, but not the 100, because as long as the 100 and the 0, yes, that are two things which you set. And so that somebody could say, yes, that is an extreme level. Yes, it's an extreme level. Yes, but it's not a comfort. It is not the only reason to enter into a reversal or a reversal trade at this level. You should also understand the candlestick pattern, the trend, and the rejection. Yes, and that is all happening here. Yes, here I entered without any kind of rejection, and here I entered also without a kind of rejection, because I understood the uptrend. Yes, and that is how, if you have a good uptrend, also the smallest wick could be a good support and resistance level. Yes, the end of a wick could be a good support resistance if you have a good trend. That is what I explained also about the EMAs. Also the 3 EMA, the 5 EMA, the 6 EMA can be a good support and resistance level if you have a good trend. Yes, that is the concept behind this. So, and let's see this trade. Yes. So you see it got a rejection again. Yes, another rejection, two rejections. That would be a nice reason to enter now into a call after twice rejections. You know that there is happening here in the lower time frame, for example on the 5-second chart, a double bottom. Yes, and the double bottom means after double bottom you get almost a trend continuation. Yes, a trend. Uptrend after a double bottom. Now we are getting also the triple bottom. Yes, it looks like a triple bottom. Price is really fooling. Yes, trapping. You see how dangerous is this? Yes, it could be. It looks like it would be a trend continuation, and in the last seconds, yes, it changed into an uptrend. Yes, and that is what is really tricky. Yes, and what I think a lot of traders would be trapped in this kind of condition. Yes, but if you understand that you get here a reversal now because there was this weak candle. Yes, and you know, mostly price shows you in the beginning in the 30 seconds of the purchase time the wrong direction to trap you. Yes, that is what you should care about, and you don't have to take too much in consideration the movement of this running candle. You should more understand the context, yes, where the market is, and then doing your trades based on the context. And in this case, it was here the reversal happening, this weak candle, this uptrend, yes, this corrective impulse after this yes, corrective wave after this impulse wave, yes. So that is what you should understand here, yes. Also, if you got here a bigger wick, yes, but you have to understand the reversal candlestick pattern. And if you do not understand them, yes, they are really powerful if you are using them on specific key levels, yes. And yes, that was already. So that was it. I hope I have given you a few insights, yes, how to trade in such a nice uptrend, yes. Obviously, it's a little bit tricky, and you need a lot of experience to understand those things from the market movement, because if you take too much care about the running candle, you get almost trapped, because you see often that price will change direction in the last few seconds where you cannot act anymore. You are helpless there, you cannot act, and that means that price tries you in the first 30 seconds of the purchase time to trap you, yes, and shows you some direction, and you think, wow, that's nice, and you are all the time in the money, and only in the last few seconds it will take you out of the money. Obviously, in this case, it would have been better to do a call after the rejection, yes, after the second rejection. Yes, the second rejection was, in my opinion, the best entry point in this kind of trade, because it was a confirmation that a double bottom was formed. Yes, and that's the reason why it shot up so fast in the last few seconds, because a double bottom unfolded. So okay, that was it. But we have, I have to show you also here, we got another wick, yes, which was the reason maybe why price was all the time here below. Okay, so that was it. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye-bye.